G'day everyone, welcome back to Pete's Investing. Today is June the 6th, 2023. This is the Bitcoin update. On the weekly, we're looking at a neutral positioning at the moment on our bias. Likewise, on the daily, it's broken down into a bearish signal. So to go short on the hourly, I'd wait for the weekly to break to the downside to be more confident and have a better probability of success. So looking at these individually, on the weekly, our triple moving average of the price chart is differing from the moving averages of the CCI 150, and that's giving us this neutral signal, and that broke down from a bullish signal previously. On the daily, I should say, that's currently in a bearish momentum, so primarily bearish trades based on the daily, but again I'd wait for the weekly to align as well. You can see here it's bounced off this, it's broken through this key support at 25.88, and it's hitting this minor support at 25.398. So it may bounce further to the upside, or if it breaks below this support, we'll see how it goes, but we'll just keep an eye on that before making any conclusions on that one. You can see back here we had a divergence, a bearish divergence on the CCI versus a bullish divergence on the price chart. I like using divergence to give you an idea of potential reversals, and here it worked out. The CCI kept declining, and so did the price, and it broke below our channel in terms of that area there. And again, if you're new to the channel, by channel I'm talking about the trend line channel. So you would draw a channel like that between that divergence range from the highest points to the lowest candles, and when it breaks below there, you can see there, that's when you put in a target. And in terms of a target, you put in from the lowest previous point to the highest point in that divergence, and actually that would have been about there. So the initial target would have been, so when it broke through there, the initial target would have been the 38 to the 50% level, and this went as low as the 61%. So that would have been your target area, somewhere between that area. I initially put in the first Fibonacci level as your initial target area, but to be a bit more adventurous, you put in a secondary Fibonacci level, and that happened to go to the second level. But to be more confident of our potential, at least targeting, I'd put in the first level only. And then the same thing happened with this second divergence. It again bearish versus bullish on the price chart, and again just to you draw a price channel between those highs, and this didn't work that time. Let's do it again. So you'd put in a why isn't it working? Let's try it again. There. No. To there. To the lowest candle in that range, in that divergence range. So when it breaks below, then you put in a, from that point there, you put in a Fibonacci to that high. So when it breaks below the channel, your initial target area, well, it broke through the 23% there, so that would have been, so you would have put in a potential target at the 38% level to the 50%. You can see there it eventually hit it at this point there. So it can always do this, it can always bounce up and give you a bit of a false signal, but then it eventually does break down. So where we are today, it's hitting this minor support level, and it's currently making a little bounce. Now going to the hourly chart, you always look out for the 60%, 61% retracement level. So you can see back here, the price came up and bounced just off that 61% with that wick before falling further to the downside. So that's how you would read potentially further declines or potentially reversals. So where we are at the moment, you would put in a Fibonacci at that low and to that recent high. So currently, as you can see, it's just approaching the 23%, which coincides with this blue support line. But again, to see more of a favorable bullish momentum, you want to see a break above the 61%, which is up there. I'm not suggesting you put a target in there in terms of trading. I'm just saying that's a potential area for it. You want to see a break above that and further above that before seeing any further bullishness in this chart. Also, if I zoom out, I've got a long back test here and a bullish back test here. So you can see there all those trades made. There are a couple of average downs happening. Averaging down meaning we don't use stop losses. We add to the position when the price goes against us. To avoid those average downs, we trade primarily with the weekly and the daily when they're in alignment. So again, for example here, going short at that period there in April 23, You can see there on the weekly it's primarily long positioning, even though the daily is showing short positioning. You can still trade with the hourly in isolation, or the daily aligning with the hourly, but again you're reducing your odds the lower the time frame you go. So if you do this on isolation for the hourly, you're reducing your odds in trading. It's best to have the weekly, daily and the hourly aligned. So to understand this and other trading ideas, reference the links in the description below. Subscribe to my Patreon page, where we also do scans of weekly stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.